morning to all our viewers who've joined us live on this broadcast here at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Firstly, like to apologize for that delay that we are seeing a little bit, but we are just about 8 minutes odd to opening bell, and what we saw yesterday, that momentum really picking up in the market. So the bulls maintaining that control, we could say, driving the Nifty almost to that 24,700 levels, just short shy, we would say, and the index sustaining this uptrend for a fourth consecutive session. So the bank Nifty too seeing some good momentum, managing, if it does manage to stay above that 50,500 levels, then 51,000 shouldn't be far away in today's session or even post that. Let's see what happens. But it is the IT stocks also that have been all a buzz all through the week, we could say, moving just up and up. Let's talk about all of that in detail, but first let me take you through all the top headlines and the cues that we can be tracking from the global markets. Now, the Wall Street rally paused, in fact, with the S&P 500 and the Nasdaq both snapping their longest winning streak since 2023 as investors look on to release those minutes from the US Fed's July meeting. Now, the commentary from the Fed chairman at the Jackson Hole Symposium later this week will also be keenly watched out for. And stocks in the Asia-Pacific region have slipped on that bearish cues from Wall Street. The GIFT Nifty too is suggesting a lower start for the Indian equity markets. And crude prices remain under pressure as demand from Asia remains quite weak, as well as the ceasefire talks are in progress in West Asia. Gold prices, on the other hand, have extended their rally as the dollar has weakened and investors are betting on that impending rate cut by the US Fed. Well, telecom data for the month of June indicates that subscriber additions of 19.10 lakh for Reliance Jio. Airtel subscribers have remained rather flattish at 12.5 lakh, while Vodafone Idea continues to lose its market share, losing about 8.6 lakh subscribers in the month of June. That's pretty much the setup we have. Even our, global cues seem a bit weak and muted today, but that doesn't mean that we cannot take off from where we've left yesterday. Now, it was the fourth consecutive session of gains, but today may be a bit of, profit taking or a bit more consolidation that we can witness. Sensex right now poised at that 80,803 levels. That's where we shut shop yesterday. And for the Nifty, it was 24,699. So just one, kissing distance from that 24,700 mark, which is that psychological resistance that we've been seeing. And if we go past this, then we can see that further up move. Now, it was the IT stocks that pretty much kept, were the ones that were a buzz and have been all through the week due to the, upbeat global cues that we're getting as well. But on the other hand, we did see FMCG stocks that were, some bit of a dampener. And though among the sectoral indices, that was the only one that wasn't in the green. The market breadth overall continues to remain in the favor of advances. We also saw, if you look at the option data, even there in the F&O segment, we are seeing the PCR jump to about 1.27 versus the 1.17 levels. So that means that it is quite comfortable for the bulls at this point. A whole host of stocks, about 15 of them, continue to remain in the F&O ban list. A new one added today is Nalco. So you watch out for that one. That one's been added, whereas the ones removed from the list this time are the fertilizer stocks like Chambal Fertilizers out, India Intermart, Intermesh is out, PNB is also out of the F&O ban list. So we have a couple of stocks that have gotten out, but 15 continue there, in that ban. In terms of fund flows and what the setup really is, we are continuing to see FII sell yesterday. Net selling of about 1,457 crore worth of equities was sold, whereas DIIs tried to do that heavy lifting and try to manage almost double. So 2,252 crore worth of equity shares is what the DIIs went on to buy. The VIX also is comfortably below those 15 levels, in fact falling about 3.46% yesterday at 13.82 is where the India VIX currently stands up, and this is pretty much sustaining all those key moving averages. So quite interesting to see where we are poised right at market open, whether we get to see it. Well, the GIFT Nifty was showing some bit of pressure, just about 30 odd points down. But we can, see that kind of pressure, which, what we're getting from the global cues is also that all of the Asian markets were down. This, of course, there's some trade data that is coming out of Japan, and which is why you're seeing those indices and markets that were seeing some bit of pressure. But we are opening there on that slightly red note, we would say. The Nifty 50 there around those 24,600 levels, whereas the Sensex 2 is at around that 80,600 level. So not much, we would say rather flat open at this point, but more towards that negative sentiment, we would say. We'll have to wait and give it some time to see what are the kind of strategies and the kind of stocks that are working towards this. But more we are seeing the more declines this time around. Like you can see it on your screens also, the BSE advanced decline ratio, it is in the favor of the declines at this point. But even the broader indices for that matter right now are rather flat, we would say. So we're going to have to give it some time to pick trade or to pick that momentum up from here. But let me get on board my guest who's been waiting by. Rajesh Palviya now joins us. He's the Senior Vice President of Research Technical Derivatives at Axis Securities. Good morning, Rajesh. Looking at the market open, we were expecting this little bit of pressure after that good rally that we've seen, but it was a pause even on Wall Street, and a similar sentiment continuing here across Asia and Indian markets. Do you think today will be that day of where we're going to see rather range bound or consolidation before we move upwards from those 24,700 levels?
Good morning, Stacy. So initial dip which we have seen post opening is already shown some recovery from the intraday low. The way market has moved up in last couple of days and comfortably holding about 24,600, that clearly gives us confidence that we may see further higher level from here onward, and possibly once Nifty manages to cross about 24,730, 740 zone on intraday basis on Nifty spot, then possibly we may see a short covering action, and then this rally can extend to 24,850 zone also. Bank Nifty is almost trading near to 50,800, 51,000 level, which is immediate supply zone based on the call concentration. So if at all Bank Nifty also manages to cross above 50,900 zone on intraday basis, then here also we may attract some short covering action, and then possibly rally can extend. So we are holding our bullish view at this moment, and we are focusing on 24,700 call option, and we are projecting a target for this call option around 130 to 140 for intraday basis. So one can focus on this call option to play this up move with stop loss of 45 rupees.
Right. Well, that was the F&O strategy that you could, a couple of options that Rajesh has placed out there. Rajesh, do wait on with us. Let's address a couple of stocks that we are, getting to understand. There could be a couple of block deals that would have taken place in that window. This one that we're talking about is from Cyient DLM. Now, the sources are saying that Cyient, which is the promoter company, is likely to sell about 14.5% stake or close to 1.15 crore shares in Cyient DLM, and the issue size for this deal is placed somewhere around 860.9 crore rupees. This given that the floor price is at 748 0.65 rupees per share. If you compare this is a 5% discount or so to yesterday's closing price. And remember, there will be that 90-day lock-in period for the sellers. But post this deal, we are going to see the promoter, that is Cyient Holdings, their holdings really come down from 66.66% to about 52.16%. So you're going to see quite, that huge close to 14% that they're looking to shelve off. 14.5% is what we're given to understand. Another block deal, and in fact, continuing with Cyient, JP Morgan did put out a note on how this deal could really transpire and what it would mean. They continue to have an overweight call on Cyient, and the target is at 2,100 rupees per share. They're saying that this whole divesting stake and the proceeds from it will be used for further M&A as well as debt repayment. The company does intend to utilize these investments into their semiconductor business particularly, and also how the company's digital engineering and technology, or DET business, which already has a debt of somewhere close to $47 million, that could be then repaid by this sales proceeds. So this can be a way of utilizing the money if at all. And the fact that this vertical is what they believe will have the most potential, and to go on to have further M&As, and also within the auto business, not just the DET business. So that is quite interesting to see how this transpires and plays out. But this particular stock, Rajesh, do you find anything interesting? We've been talking about IT stocks in general, but this being a mid-cap, or rather deviation into the R&D space as well. How is Cyient placed compared to the other mid-cap IT players, and between the parent as well as Cyient DLM, how are the charts really placed?
So Cyient DLM, strong gap up. And now stock managed to give breakout of its previous swing high of July 2024. And the way stock is, showing a buying interest, this is the second consecutive week where we are seeing, bullish momentum in this stock. The way stock managed to give breakout of its multiple supply zone on weekly chart also, we believe that, if it continues to hold above 1960, 1950 mark, then possible rally can extend further, and we may see target towards 2150 to 2180 kind of zone in the continuation of this up move. So I think very strong buying action is taking place in this stock. So I think one should hold the position with stop loss of 1960 for Cyient DLM, and upside target is 2100 to 2180. Mid-cap IT is showing good traction, as you pointed out. Yes, so we believe that IT stocks can be kept as a on a buying radar. We believe that continuity of uptrend would be there. LTTS is looking very attractive from that space, L&T Technology Services. So I think here we can see good traction. Already breakout is already registered in the stock in last couple of days back. And the way long built up is there in the derivative data, we expect rally can extend. 45, 50, 54, 50 to 5500 would be the next target for the stock. So one can buy this stock with stop loss of 53.30.
Interesting. So not just from the mid-cap IT space, there are other picks that you could take. L&T Technology Services is one that also is on Rajesh's radar. Well, another block deal that we are getting to hear about is from PNB Housing Finance, and this we are given to understand that General Atlantic Singapore Fund is likely to sell about 5.1% equity in the company. This at a floor price of 775 rupees per share, which again is at a discount of about 4.4% to the current market price. The offer size then is somewhere around 1,032 crore rupees, and IIFL is the sole broker to this deal. So it will be interesting to see how these, a lot of companies and promoters that we are seeing, a lot of PEs that are looking to exit or looking to pare their stake in companies via block deals, and that has been increasing in the past couple of months at least that we've been seeing. But let me also take you through a couple of data that is coming in from the telecom sector. Now, there was June data that is put out, and where we saw Reliance Jio adding about 19.11 lakh users versus the 21 0.95 lakh users. Now there is a dip, but they are still adding, and so is Bharti Airtel, rather flat we would say, but about 12.5 lakh users is what Bharti Airtel has gone on to add. But it is Vodafone Idea that continues to lose that market share or lose ground, where about 8.6 lakh users they've lost versus the 9.24 lakh users that they lost in the previous quarter. In the previous month. This is month-on-month data. Now, interestingly, there is global brokerages that are putting out numbers and how this is really going to impact. Now, there is CLSA's report on the global telecom outlook, but they're talking about more about IT companies that have, telecom as a vertical. So they go on to say that the telecom capex, which remains the outlook remains weak at this point because they've not seen any big deal wins in the past few quarters, at least for these IT companies. They say that the enterprise 5G commercialization is still some time away, and due to the lack of any user cases, that is something that they point out will not see immediate reaction. They're also seeing the likes of a Tech Mahindra, which could go on to face multiple near-term challenges, particularly in its telecom vertical. They point out they've gone on to downgrade Tech Mahindra to a hold call with a target of 1,670 rupees per share. And they say that this is because of the strong rally Tech Mahindra has seen so far, as also the stretched valuations. Let me bring Rajesh and ask him whether he concurs. Do you think the likes of a Tech Mahindra does have its valuation stretched within the IT pack, and one should be looking at the other IT names that seem much more interesting? Like just yesterday we saw Macquarie putting something on the likes of a TCS on their marquee list. So how does Tech Mahindra really survive within all of this news flow that is coming in? And what are the charts really showing for Tech Mahindra? Should one be waiting it out at this point, Rajesh?
So, Stacy, Nifty IT index is almost hovering near to its all-time high trajectory, and the way this sector has moved up in last couple of weeks, we believe that the fresh buying interest has been returned back in the most of the IT stocks, be it large cap, be it mid cap IT space. So we believe that yes, one should remain hold their position at this juncture for IT space. I think there would be another round of buying interest is likely to be there, and we may see furthermore higher level in most of the large cap IT as well as in the mid cap IT. Now moving to the Tech Mahindra, the stock is moving in higher top higher bottom formation on a daily chart. The stock is comfortably holding above its near term short term moving averages. The way stock has shown buying interest in last couple of weeks, this is the third consecutive week where stock is making higher high low formation. That clearly shows that there is a sustained buying action is taking place in Tech Mahindra. So we believe that till stock is sustaining above 1580, 1575 zone, I think one should hold their long position. I think continuity of uptrend would be there, and possible target towards 1680 to 1700 we may see in next couple of days. So I think one should remain bullish on Tech Mahindra at this juncture with stop loss of 1570. TCS is also looking promising.
Okay.
Stock is almost sitting near to its all-time high trajectory. So I think one can hold on TCS also, and any minor dip should be used as a buying opportunity. Your stop loss should be placed at around 4400, and on the higher side, once a stock again crosses above 4550, we can see a target towards 4650 to 4700 also for TCS.
Right, so we can keep an eye out for both, from the tech space, TCS as well as Tech Mahindra. Both have something there that you could be looking out for. Now, quite interestingly, I want to talk about, life insurance companies. Now, we've been seeing some big swings within this space. On Monday, we saw them down and about. Then yesterday, there was a full recovery that happened. And among your top gainers was the likes of an SBI Life, HDFC Life and the others. Now, today, you're seeing a note that has come out from Bernstein on life insurance companies. And they say that they continue to have outperformed calls on the likes of an SBI Life, a Max Financial as well as HDFC Life. They do have an underperform call on an ICICI Prudential Life and a market perform call on something on the likes of an LIC. They do say private life insurers in India present a good way to be getting exposure into that high income households, and which is why that money could be trickling in there. They also say that private life insurers have a stable growth runway and a healthy compounding as well as a modest valuation ask at this point, and which is why they think that Indian life insurers deserve more attention from investors. Rajesh, what do you have to say about this? What is really happening within the insurance space? Why are we seeing these kind of, either we call it profit taking that happened on Monday, and then some kind of exuberance or that buying back that we saw again yesterday? How should one be playing this whole insurance pack, and do you have any particular picks?
So clearly, there is a buying interest in most of the insurance stocks, and most of the stocks are now trading near to their all-time high trajectory. Also, be it SBI Life, be it HDFC Life, even Life Insurance Corporation, all these stocks is almost trading near to their all-time high trajectory. The way these stocks have moved up in last couple of weeks, we believe that a very strong buying action has been taken place in this insurance space. I think SBI Life one can continue on a buying side of trade. Possible target 1840, 1860 we can see in the short term, and keep your stop loss around 1720. Another stock from insurance space that we like at this juncture, that is ICICI Pru. In previous day, long built up was there. Stock is now approaching to its previous swing high. A brief corrective move, but again. Stock has resumed its buying interest, and we believe that here we can see a good up move towards 780 to 800 kind of zone. So ICICI Pru is also looking attractive. One can hold on their long position, or fresh buying can be done with stop loss of 720. And from cash segment, I think Life Insurance Corporation LIC can be also kept as on a buying radar. Though there was some corrective move in last couple of weeks. But looking at the near-term structure, stock is now almost trading near to its 50-day moving average. So I think here is risk to reward is in favor to buy LIC at current level. Your stop loss should be placed at around 1040, and once stock crosses above 1100, we may see fresh buying interest, and then possible rally can extend to 1160 to 1200 also.
All right then, so interesting picks. Even Rajesh has similar picks to what they've put out there from the brokerages as well. But let's get going now and answer a couple of your queries that have been coming on our live feed. Rajesh, let's get going, and maybe you can tell them the technical side of things. Let me get the first one. Armindra Kamath wants to know your view on M&M Financial Services.
So, we have seen buying interest in M&M Financial, and now stock is almost negotiating with its multiple supply zone. I think if stock crosses about 310, we may see a good short covering action in this stock, and rally can extend to 330, 340 also. So on a positional perspective, our view is bullish, as stock is comfortably holding about a 20-day, 50-day moving average. I think one should hold their long position if already bought at lower level. Even in the minor decline, the fresh buying can be done. On the downside, your stop loss should be placed at around 295.
Interesting. So, watch out for those levels that Rajesh did mention. Let me get the next one. There is a query coming in from Debjan Bhattacharya. He wants to know your view on Happiest Minds, and how should one be looking at this particular, and if there are alternatives to this also.
So there is an underperformance in this stock. Stock has shown some recovery, but still we believe that until the stock not crosses above 830, 840 zone, trend may remain on the weaker side only. So I think if you have bought at lower level, try to book profits in this up move towards 800 to 820 zone, because that's the major congestion zone on the stock to cross. So until that level is not taken out, I think we may see attract again, supply zone around those levels. So 820 is the level where you can book profits if you already bought at lower level. But for fresh buying, we would suggest here to avoid at this juncture, because trend is still weak for stock on the short term to medium term perspective.
Right, so still a weak trend, so you need to watch out for this one. Happiest minds there. Now, there's another query coming in from Som Mindekar, and he has two stocks that he wants to ask whether it is a good time to average out. His first stock is RVNL, which he says that he had got at a price of 375 rupees. Whether it would be good to average it out right now, and also the second one being Zomato, which he had got at 175, and we know how Zomato has been taking off in the last whole week, that it has seen a good rally. Yesterday, of course, seeing some bit of profit taking after all of that news and the brokerage initiation from UBS and the others. So both these stocks, what would you advise, whether it's a good time to be averaging for RVNL as well as Zomato?
So I think yes, he may average out RVNL as overall structure is bullish, but since last couple of week we are seeing some profit taking is happening in this stock, but still long term structure is bullish, and we believe that once a stock manages to cross above 580, 590 zone, the resumption of uptrend would be there, and then upward target we could see towards 650 to 700 also on a short to medium term perspective. So I think this decline should be used as a again buying opportunity. So he may average out RVNL at this juncture. The fresh stop loss for RVNL is around 540. That stop loss should be kept as a in a mind what you are buying for averaging out. Zomato, again, a lot of buzz was there in the stock, a lot of buying interest in last couple of week in this stock. Stock has moved up about 250 mark also. So I think in Zomato, till stock is holding about 250, trend is likely to remain on the bullish side for near-term perspective also. And once stock crosses about 274, I think we may see a target towards 290 to 310 also. So overall structure for Zomato is also bullish. You can buy out stock in the decline with stop loss of 250.
Well, interesting. Actually, Rajesh, I also wanted to pick your brains a little on, shipping stocks and what is happening there. There again, we've been seeing some, one day of big swings. The next day, they're down and about. Like today itself, we're looking at the likes of Mazgaon Dock, gaining somewhere close to 4%, whereas yesterday it was among your top losers, even for the likes of a Cochin Shipyard. What really is transpiring in this space, and is there a value that one could be looking within, even for that Garden Reach is also one of those stocks that are a buzz. What would you suggest to, if somebody does hold any of these stocks, how should one be playing them?
So clearly for all these shipping stocks, long-term trend is still bullish, but for near-term structure, some profit taking we have already seen in this most of this stock. For Mazgaon Dock, stock slipped below to 50-day moving average, but again in today's session, some recovery is taking place. So I think those who wants to buy the stock for for little longer period, they can buy and accumulate this stock. I think once the stock crosses above 4600, 4640, I think we may see furthermore traction toward on the buying side, and then possibly stock may attempt to move further higher to 4800 to 5000 level also. So for Mazgaon Dock, 4400 is the immediate stop loss to buy. For GRSC Garden Reach again has corrected, and again the same kind of buying interest. All these stocks are showing, be it Cochin Shipyard, Garden Reach, Mazgaon Dock. All the stock have shown some reversal because most of these stocks have moved into the oversold trajectory on the near-term structure. So I think here also there is a possibility of pullback, but still on the higher side, 2000 would be the supply zone. So those who are buying at current level can book some profit around 2000. That is trading view for trading perspective. Your stop loss at this juncture would be around 1760. And Cochin Shipyard is also attracting some buying interest post today's opening. And the way stock has moved up in today's stage, I think there would be furthermore upward momentum towards 2250 to 2300. So those who have already bought can book some profits around 2300. At this level, I would suggest to keep stop loss around 2120.
Right. Quickly, Rajesh, I'm going to try and squeeze in two more queries here. Vinod Patange wants to know your view on Uno Minda. He says whether it is a good time to be booking profits or is there more upside that you could see for this particular stock?
So I think I would suggest you to trail your stop loss. Don't book profit because almost stock is negotiating with its previous swing high of July 2024. And I think the way stock has moved up in last couple of days, there is a high possibility that stock may attempt to give breakout above 1180, 1190 kind of zone. And if that happens, target for Uno Minda would be around 1250 to 1300. So I think he can trail the stop loss towards 1145 to hold the position.
Right. So trail your stop loss. Don't book your profits yet on Uno Minda, is what Rajesh is suggesting. Another query coming in on KNR Constructions. How would you look at this particular stock? It is in the green right now, but what are the charts really saying, or the technicals for KNR Constructions?
So some profit taking is happening in this stock, and stock is now broken its near-term support area, which was placed at around 338, 340 zone. So I think until the stock remains below to 340, some more pressure we could see in the stock prices. On the downside, stock may slip to a level of 315. So I think one should wait for that correction to happen, or wait for 340 level to cross on the higher side on a closing basis. If it crosses 340 on a higher side, then again one may initiate some buying position. But till 340 is not taken out on the higher side, I think one should wait for 315 for 310 level to come to initiate long.
Well, interesting there. Rajesh, do you have any picks or any recommendations for our viewers on your end, or what you are keeping on your radar?
I think from PSU banking basket, we are focusing on Bank Baroda. So that stock is looking attractive, though some pressure is there in Bank Nifty, but the Bank Baroda is looking promising. So I think one can look to buy this stock with stop loss of 249. Upside target we are projecting towards 265. Some buying interest is from the sugar and sugar space, and from that space, we believe that one can keep most of the sugar stocks are showing good traction in terms of buying. So Praj Industry is looking promising from that space, and we believe that here we can see a good up move towards 840 to 860. So Praj Industries buy with stop loss of 755. And the third space that we like at this juncture is from pharma and the healthcare space, and we believe that here we can see continuity of uptrend. So Lalpath Lab is looking promising from that space. Continuity of uptrend, series of higher top, higher bottom formation is there. So Lalpath Lab can be a good attractive at this juncture. 3500 is the positional target for the stock. Keep your stop loss around 3270 to buy Lalpath Lab.
Well, interesting picks that you've pointed out from the sugar space, from also the diagnostic space that Rajesh has on his radar. So you can watch out for these stocks that he mentioned. But with this, we're completely out of time. So let me thank Rajesh Palviya of Axis Securities for helping our viewers with their queries, as well as helping us understand what is happening between different sectors and spaces that you could find interest and value in if you want to go on to build your portfolio. Thanks so much, Rajiv, for speaking with us here at Moneycontrol. And to all our viewers as well, I hope we did try to answer as many queries that you keep sending us and continue to send us on our live feed, and we'll try and take them up with our experts on the show. But for now, it's a wrap and a goodbye from the entire team that puts this piece together. Thanks so much for watching. We'll be back again tomorrow, and do keep sending us all of your feedback in our comment section. We'll try and see how we can change things and make it better for our viewers. But also don't forget, this evening we have a very special Moneycontrol's mutual fund summit that is going to happen at 4 p.m. onwards. So do tune in for to get all the biggest minds within the mutual fund space are going to be speaking to us here. So you want to catch up and see what are the kind of SIPs you really need to be watching out for and where you could be going on to be investing. In fact, our theme for the summit is how SIPs are transforming Bharat really, and how we're seeing that monies get into the investing system. So do watch out and come back here at 4 p.m. for the Mutual Fund Summit. But other than that, for all of your other business and financial news updates, moneycontrol.com as well as Moneycontrol app is where you need to be logging into. I'll be back again here tomorrow.